Welcome to the Recon Trader. In today's video, I will share with you some technical analysis on the Bitcoin charts to determine whether or not Bitcoin is actually ready to break out. And more importantly, will that breakout be towards the top side or will it be breaking down? So let's get right into the weeds and jump over here to the Bitcoin USDT one-day chart on the Binance exchange. Now, in my previous video where I did some technical analysis, I had opened a short position after the one-day candle closed down below the EMA ribbons. That is a very bearish signal, and I did eventually capture around 41% profit when the trade finally closed out. Due to my trailing stop loss, which was following the price down, eventually got taken out on one of these moves back up. Now, when I look at this current price action, it appears to me to still be very bearish. We did see a move down, but the price came back up and retested, but got rejected at the bottom of the ribbons. We haven't even been able to penetrate back into the ribbons. It sold off again, and right now the price is actually pushing higher. However, if you see this little green EMA, that was on the top of the ribbons. That's the short-term EMA, and it has actually flipped to where it's now on the bottom of the EMA ribbon. That is typically a very bearish signal, just like back here when the green EMA flipped back to the top of the ribbons. You see it became a very bullish signal. And if we scroll back, we can see back here where the EMA ribbon started to flip and the shorter time frame EMAs penetrated to the bottom of the ribbon. We had the big sell-off. So right now it's up to the bulls to prevent this from happening, but in reality it's getting real tight, and that first short period EMA, the top green line, has already taken up a position on the bottom of this EMA ribbon. So right now this is still very bearish unless the bulls can put up some type of defense to prevent this and perhaps even get a close up above these EMA ribbons on the daily candle. Now, if we come up into here and end up rejecting, and that's very realistic, we have some resistance on this particular line right here, in addition to the resistance of the ribbons. So if we see a rejection, I may very well again open another short position with not a huge profit target, but the profit target would more than likely be around 41,000, and I'd have an extremely tight stop loss somewhere around the top of these ribbons in all likelihood, depending on how big of a rejection we get. Now, for me to actually enter a trade, I would need confirmation, and that would most likely be a close of a candle that has been rejected from this level. Now, you could also take another approach of wait for the candle to reject from this level, and if you wanted to wait for further confirmation of the continuation of this bearish momentum, then you could wait for a close below the 41,000 level, which could then send the price down here to around 36.5, which would be the 786 level of the Fibonacci retracement. And we did see support back here at that level, so that would be a valid level of support if the bears are able to crush down through here. Also, you could wait for an entry on your position once the price gets below this 618 level, which is this orange line and has acted as support on multiple occasions. And you might want to wait till the price action gets below that before you enter a short position. Now, on the flip side, for me to enter a long position, I would need the daily candle to close above the EMA ribbon. Also, more than likely, I'd want to see a close above this green line, which is the 50% level of the Fibonacci retracement. If I got a close above that, then we could see another push up into the 52 or 53 level. However, we do have some resistance around the 50,000 level, so you would want to take that into consideration. But I think a close above the EMA ribbons and a close above the 50% EMA at around 47,000 would be a signal the bulls are trying to regain control of this price action. Now, if we jump over to the 4-hour candles, you can see I have a longer term trend line drawn in from the 52, almost 53,000 level. And right now we're approaching that trend line. So if I was perhaps looking to trade on a shorter time frame, I might just look for a breach of this trend line, maybe a retracement back into it and a bounce off for confirmation. Again, when I enter trades, I like to have some type of confirmation that we're actually moving in the direction I want to be going. However, with that being said, if we get a rejection at this trend line, then we could see this price action break down to, again, around the 41,000 level, which is the bottom kind of these candles, to the 40,000 level. So if we see a rejection here, I might take up a short position with my profit target down around 41,000. However, if we are able to break out above this level, then my profit target more than likely would be up here around the 47,000 level, where you can see a whole lot of resistance at that 50% Fibonacci level. So those are two setups I'm currently keeping an eye on. Now I've got about an hour to go before this candle closes. I have a couple hours to go before the daily candle closes. Now finally, we'll jump over here to the weekly chart, and you can see we are still very bearish. And in my experience, like I mentioned in the last video, the bull trap was actually set when the bulls started buying this dip. Now, whether the bears can turn this into a bear market or not is a whole nother story. They need to actually push this price down below the lows of the dip where the bulls were buying, and so the bears would actually need the price to breach down below the 28.8. And I can tell you, if that price breaches 28.8, we are more than likely headed down to the 18,000, 19,000 level, which would be the 1272 level on the Fibonacci retracement that I currently have on the chart. Now, the bulls can prevent this from turning into a bear market, even though they suffered this bull trap. And as you can see, the 618 level has been acting as support. And as long as the bulls can keep the close above the 618 level, then there is a possibility of them pushing the price back up into the 382 level, where we did see resistance. And actually, I think rather than 51,000, it was more around 52 or 53,000. But still, there is resistance up in this region that the bulls would have to break through if they hope to get back to any chance at new all-time highs. Now, with that being said, if the bears are able to push this price down through the 618 level, which is 42.5, and get the close down below, say, 41,000, where we see support has come in as well on the wicks of these candles, not so much on the close of the candles. But if we get a close below 41,000, I will for sure be opening up a short position with a price target minimum of 36.5. But in reality, I will probably take some profit there and keep an eye on volume. If there's enough volume, then I might actually entertain a second portion of my profit coming off at around 28.8 with a trailing stop loss just in case the price did reverse, so that I ensure that the position closes in profit. And so I think that's enough jaw jack, and that pretty much wraps it up. I just want to do a real quick video on the charts and what I'm watching as far as the price action goes. The reality is, with the price action that I'm seeing on all the time levels, it does look like Bitcoin's due for a breakout. The question is, will it be up or down? And as a trader, I don't make predictions. I let the charts tell me what's going to happen, and I try to then get in a position that limits my risk while offering me the largest potential of profit. So, if you like this video, do me a favor, spike a like. If you like to see videos like this technical analysis, you probably want to shoot that subscribe button. If you have any questions or comments, drop those in the comment section down below. And remember, never send your money into battle without first doing your recon. See you in the next video.